Gautam Sinha Roy joining us from ICICI Pru Life Insurance as well. Gautam, hi, good to be speaking with you. I just wanted to begin. Public sector entities have seen a massive re-rating this year. Now with what's happening to, let's say, sugar companies as well, and the kind of now regulations coming in perhaps for the oil marketing companies, do you sense that re-rating could get derated a bit, or do you think that fundamentals are so strong that there's a case for higher levels for all of these PSU companies?
Well, that's a good point. I think the PSU trade has been the trade of the year by far. But as you can see, fundamentals for many of these companies are looking better. It all started with the PSU banks where the long-term NPA issues, that NPA cycle that was there bothering them, that got corrected. We have seen similar positivity in power sector PSUs, in defense sector PSUs, where there have been genuine business developments. So I do believe that while the stock movement has been quite strong, so to that extent, yes, there could be some time correction in the interim, but there has been a massive structural change in many of these PSUs that has to be really appreciated. And market is appreciating that. So we will see these companies trade at higher levels compared to their past. But you are also right in alluding to the fact that if there is continued regulatory uncertainty, like what we're discussing just before, that could create some sort of volatility in some specific stocks. And mind you, it's also true that not all stocks have done very well in PSU. There are pockets where still underperformance has been there, or the performance has not been stupendous. So those pockets are where I think the regulatory uncertainty is still high. But yeah, it's been a great year for PSUs, and this is backed by structural changes. The valuations were always very attractive.
Right. So Gautam, what's the tactical call right now? Higher allocation to large caps, and within large caps, are you also with the consensus call? That's the private banking space.
Yes, that second part, I am totally with that, that one has to be in the private bank space, specifically going into next year, because, with continued political certainty, we think the re-leveraging of the economy will continue. CapEx will continue to be a theme. So we'd like to play that theme. The NIM correction that has to happen will happen in a couple of quarters maybe, and then the natural growth, which is led by asset growth, will take over. So that definitely is a consensus call. But to answer the first point, I will not stay out of mid and small caps. I might control my allocation in mid and small caps, especially in a multi-cap portfolio. But I think staying off mid caps will be a dangerous thing. Because again, just like in PSUs, we are seeing a very wide swathe of fundamental changes for the good happening in mid and small cap companies. A lot of companies which are investable are there today in that space. So we'll continue to be invested in that space with a little wariness about the valuations.
Wanted to get your sense, Gautam, on how to now approach the power space. And if I just pick out the financiers from there, IREDA has already jumped up in terms of valuations post its listing. I think the stock is 80 odd now per share, locked in that 20% circuit mark. We've all seen what's happened for PFC, REC, year-to-date best performers, and you're still not seeing the stocks relent any bit. Do you think valuation is getting a little toppish here, or would you say there's still headroom?
Good question. Actually, I was debating this mentally in the morning only. To be honest, within the entire PSU space, and there are a lot of PSU companies in the power space, this is one area where valuations really are now getting into the demanding side. And it's very unique in the sense that the entire power value chain, right from raw material suppliers, financiers, the power utilities, cap goods suppliers, everybody has re-rated. It's quite unique. It reminds you of 2007 in that sense. So 2006-07 rally that we had seen in that sector. It's predicated also on some demand-supply imbalance, which is expected as the economy ramps up, which is true to an extent. There have been some fundamental reforms in some of these companies. That's also accepted. But the very sharp move that has happened in the last month or so, that I think doesn't leave too much margin of safety in that sector.
The margin of safety seems a bit limited when it comes to power financiers, but would you say, Gautam, that there's enough, margin of safety when one looks at IT and pharma?
IT especially, I would agree that margin of safety is there, but the near-term catalyst in terms of the demand growth is in large cap IT is not there as we speak. So that continues to be a weak area. But the good part about IT is the growth paradigm has shifted to mid caps, right? So if you look at mid cap IT companies, they are delivering quite good growth in an environment which is tough, which is unprecedented. Earlier, it used to be quite the opposite. So the reason probably also is because of the new management which have been brought into many of these companies. They have attained a certain scale, and this is a business in which scale begets scale. Once you are around $1 billion, getting those large deals becomes easier, which hence gets you more growth. So IT, well, selectively will be there in IT, especially with a mid-cap focus. And within IT, specific themes like ER&D will continue to do very well. So be selective in IT. Pharma of late has done well because of the US generics rebound. We have seen the pharma, the other part of pharma, which is essentially the local domestic brand selling, that's pretty much been a compounder. That's almost been as good or bad a compounder as consumer-facing businesses are. So very B2C granular businesses, good businesses, many of them there. Not too many pure plays, but definitely worth investing in from a longer term perspective.
Gautam, good to be speaking with you. Thanks so much for making time and speaking with us.